Okay, this problem presents us with the trial balance as of May 31st. And then in addition to what they have above in the trial balance, this consulting company also has the following accounts. We've got accumulated depreciation, salaries and wages payable, supplies expense, depreciation expense, insurance expense, and utilities expense. Because those we'll see when we come down to this data here, those will be the adjusting entries that we need to make. So the first entry of the data, it says $900 of the supplies have been used during the month. So if we look up in our trial balance, we have supplies at $1,900. So if we come here, let me make this a little bigger, okay. We are going to have supplies expense, right? If we look over here in our list, what didn't it tell us? Yes, so we've got supplies expense. That's an account that we need to add for the $900 worth of supplies that has been used during the month. And then we are going to credit supplies. So right now, supplies is an asset. And we set that asset up when we very first bought the $1,900. Now we're showing, okay, we've used some of those. So again, that's our number one entry. Then we'll come down here, whoops, go back in there. And we'll do our number two entry. Okay, so then the number two says utilities expense incurred but not paid are recorded on May 31st for $250. So, darn it, why did it pop out of there? Okay, so utilities expense, and again, look over here, it tells us that that's going to be added. Utilities expense for the amount that they tell us, the $250. Now, we don't have a bill yet, so we can't pay it, so it's going to go to accounts payable. Or is it accrued liabilities? Let's see. Do they have accrued liabilities down here? No. Okay. So it is accounts payable. Okay. And number three, an insurance policy for 2 years was purchased on May 1st. So that doesn't, I guess that leads us to, they could tell us a little bit more. So they're saying that up here, what's in this prepaid insurance, this $3,600 was May 1st, and it was for a 2-year plan. So 2 years would be 24 months. So we're going to take that $3,600 and we're going to divide it by 24. So if I do that on my calculator, so 3,600 divided by 24 gives me $150. So I'm going to charge off $150 to insurance expense. So again, look down here. That's one of the accounts they want us to add. So insurance expense, $150. And then my credit is going to go to my prepaid insurance. So then slowly over those 2 years at the end of each month, I'm going to do an adjusting entry for $150, which will slowly get rid of that prepaid insurance. Okay, then number four, $400 of the balance in the unearned service revenue account remains unearned at the end of the month. So let's go up and look for that. So our unearned service revenue right now is $2,000, but they're telling us that only $400 of it remains unearned. So then that would mean $1,600 has been earned. So then we will debit unearned revenue for $1,600. So again, I looked at the balance. I want to only show it at $400. So that means I have to reduce it by $1,600. So I have to debit it to do that. And then now that I've earned the revenue, it can go to my revenue, my service revenue. And 5 says May 31st is a Wednesday and employees are paid on Fridays. So this consulting company has 2 employees who are paid $900 each for a 5-day work week. So they're paid $900 each for a 5-day work week, which would be $180 per day per employee. Okay, so then it tells us that again, what does it say? The May 31st is on a Wednesday. So then that would mean we would have Monday, Tuesday, and Wednesday that we need to accrue for. So then that would be 3 days times 2 workers times $180. So that's going to be $1,080. So then my entry, so that was just kind of my work, just so you guys followed what I was doing. But my entry is going to be a debit. So my entry is going to be a debit to salaries and wages expense. For the $1,080. And then we're going to have a salaries and wages payable, as it tells us in the instructions. Here it told us we'd have a salaries and wages payable. So we figured out that amount. All right, then number 6, we have the equipment has a 5-year life with no salvage value, and it is being depreciated at $190 per month for 60 months. So then we are going to have depreciation expense for $150. And then our credit is that contra account, accumulated depreciation, equipment. I guess I'll go a little closer to it. For $150. And again, always double check that we're writing here. So we were supposed to add depreciation expense and then accumulated depreciation equipment. So we're good there. Okay, then our last one is number 7. And that says invoices representing $1,700 of services performed during the month have not been recorded. So then that means that we have, we've earned revenue that we have not recorded or billed out. So then in that case, we are going to debit accounts receivable, which already exists up there. So that's not a new account. So we debit accounts receivable for the $1,700 worth of services that have been performed but not billed out or recorded. And then we're going to credit service revenue. Because again, we've earned it, we've completed it. So then these are all of our adjusting entries that we need to record. Now I'm going to see if I can move them over here, because then the next thing that it wants us to do is to make our adjusted trial balance. So our adjusted trial balance I'm not going to want it this big. Let me see if I can. back in there. So then, I don't know if I have the room to quite do all of it. Let me try to scooch you this a little bit so I can see if I can get it in there. Abbreviate a little bit. Account number 101, cash. We didn't make any changes to that. So that's still 4,500. Our accounts receivable, we did, right? So our accounts receivable, I mean, if I could do the little T account of it, which may be slightly hard. So I'm going to just verbally say it. So it started with the $6,000 here. As we look through our entries, I added $1,700 to that. So then my accounts receivable now is going to be the 6,000 plus the 1,700. So 7,700. If I was using a real board at school, I would T account them. But again, it's a little challenging in this app that I'm using. Okay, then our supplies, we know that those decreased. We went from the 1,900 down to the 900. So then that's going to be our balance now. And again, it would be that 1,900 minus the, oh wait, no, sorry. We went down to 1,000. We used 900. Okay, then we move on to our prepaid insurance. And our prepaid insurance, we just amortized out 1 month. So if we come over here, we just reduced it by $150. So it went from the 3,600 that it was here, and then we reduced it by $150. So then our prepaid insurance goes down. $3,450. Okay, then our next one is equipment, and equipment itself does not change, but now we have added that accumulated depreciation. So as we come down, our equipment is still 11,400. But then now we add this new account called accumulated equipment, which is 150 is our account number. I'm just going to abbreviate those a bit just so everything fits on my screen. So that's my abbreviation for accumulated depreciation equipment. And then this is going to be a credit balance though. Remember, it's what we call a contra account. So even though it's in the asset section, its normal balance is a credit. And if we look down at our entries, here it is. We set it up for $150. Okay. Then we come down to that finishes our assets. So let's just double check that I didn't miss any as I look over here, that we didn't set anything else up, but we did not because we just had the accounts receivable and the accumulated depreciation and we are good. Okay, so then we move down to our liabilities. So we have accounts payable. And that started at a $2,200 balance here, but we did add to it. We accrued some utility expenses. So we have 2,200 plus 250. So again, that balance plus this entry gives us 2,450. Now then our next one is unearned service revenue 209. Now yeah, that's okay. All right, so 209, unearned service revenue. And then that we adjusted, so it started at $2,000, but then we estimated that it really should be a balance of 400 as of the end of the year, which means we earned 1,600. So then 400 should be our end of the year balance of that. Now then we had this new account that we needed to add, this 212. So 212 was our salaries and wages payable. And our salaries and wages payable was $1,080 as we looked at this entry over here. Okay, then we come down to our common stock, and that did not change. And that's 20,000. All right, so that's 20,000. Then we get into our service revenue. Our service revenue is 7,500. And we did record some more of it down here, actually two different entries. So 7,500 plus what we recorded here from the unearned revenue that we then earned, and then what we did not bill, the 1,700. So that is now $10,800. Okay, then we have our expenses. That's it for our revenues. So then we have our expenses, 717. If we look at our new accounts, that's our, oh, no, sorry. 631 is our first one. Supplies expense. And then supplies expense, if we look over at our lists, we charged $900. So that's going to be a debit. Then we come down to 717, depreciation expense. And that is going to be what we recorded here, the $150. Then we have insurance expense. And I'm just following, I'm looking at the accounts that they tell us we needed to add, and I'm looking at the numbers. So I'm just trying to go in numerical order. So insurance expense, and insurance expense, if I look at my entry over here, was $150. Then if I jump back up here, salaries and wages is 726, but I will also need to adjust that number. The salaries and wages on our trial balance were 3,400, sorry. And then we accrued 1,080 for those last 3 days over here. So that is 4,480. Then our rent expense, I don't think we had any adjusting entries to rent expense. So then that is going to be excuse me, the 900. But then we had utilities expense that we accrued. That's 250. And then finally, no, that's it, right? That should be everything, right? We should have everything in there. So then now we'll double check our debits and our credits. So if we add those up, that's the nice thing. If we could do this in Excel, which you could, then you could just do a quick total of these and not have to manually add them all up. So that gives me, oh, I'm off though. $40. Off by $40. Let me add up the other side. Yeah, but my debits, so I'm going to just put my totals in here real quick. So what I get when I total these up, and where I'm going to just go back and double check here. My total is 34,080, whoops, for my credits and my debits. So then my trial balances, that's obviously what we want it to do. But when I look back at what the textbook solution says, it says that it should be $40 higher than that. Oops. And this is an 8, not a 0. But I did record all of our entries over here. And I didn't miss any of the items on this side. Are we the 250? $400 remained at the end, so that was $1,600. $900 a day. I did that right too, I think, right? Or $900 for a 5-day work week. So that was 180 a day times 2 times 3 days. So that's 1,080. And then the depreciation expense. Oh, there it is. Okay, so sorry, the depreciation expense is 190, and I wrote over here 150. So see, that's where, when the textbook tells you you can even have your trial balance, but doesn't always make it correct, just something like that. So I inadvertently wrote the 150 and it should have been 190. So then really, if I go back up here, my accumulated depreciation should be 190. And then my depreciation expense should be 190. And then I do tie out then because the textbook says it should be 34920. Okay, so that was my typo mistake. But it's a good example because it just shows you that those things do happen. And so even though you can get your trial balance to balance, doesn't necessarily make sure everything, doesn't necessarily guarantee that everything is correct. Okay, so that is it though. I wanted you to just understand how to do those adjusting entries and then how we funnel those into the adjusted trial balance.